Welcome to the Daily Update Podcast, where I'll go over the action in the market for Friday, June 27th, and we'll see how things look for Monday, June 30th. Going over what happened in Friday's session, the U.S. equity markets closed the week on a strong note, with the NASDAQ 100, and S&P 500 closing at all-time highs. The S&P 500 gained 0.52%, supported by above-average volume, despite a midday dip. Growth stocks, particularly megacaps and semiconductors, are helping to lead the charge, outpacing value stocks. Small and midcap stocks also held up well. This performance reflects a market capable of shrugging off intraday volatility and maintaining upward traction. Looking at economic and policy developments, economic data released on Friday presented a mixed picture. The core PCE price index, a key inflation gauge, rose 0.2% month over month, exceeding expectations, with an annualized rate of 2.7%. Meanwhile, personal income and spending disappointed, declining by 0.4% and declining by 0.1% respectively. Consumer sentiment improved slightly to 60.7, though it remains below last year's 68.2. These figures suggest persistent inflationary pressures alongside signs of economic softening. On the policy front, trade developments made headlines. A new U.S.-China trade framework agreement aims to increase rare exports from China, a positive for both economies. However, the markets briefly faltered after a Truth Social post from President Trump signaling potential tariffs from Canada, citing 400% dairy tariffs and digital services tax. Trump responded with saying that we're done talking to you and we'll let you know what the tariff rate will be. Additionally, a proposed bill with significant tax cuts is under Senate review, with a potential signing ceremony targeted for July 4th. These developments underscore the interplay of trade and policy in shaping market sentiment. As far as technical analysis and market trends, the market is exhibiting robust momentum. Short and intermediate term indicators, including the Stochk RSI, Williams Percent R, CCI charts, are showing strong bullish momentum, though some are already approaching overbought territory, though this can extend during positive times. The S&P 500 is trading above key moving averages and is nearing a golden cross, while the NASDAQ 100 has already achieved one a few days ago. However, a lack of strong conviction in upward moves and a bearish overbought signal on the RSI 14-period chart warrant caution. Market resilience is further evidenced by the ability to absorb less than favorable economic news. Growth stocks continue to dominate, with the NASDAQ 100's performance bolstering the broader S&P 500. The advanced decline line and volume-based indicators also confirm broad market strength, with new highs expanding and new lows remaining minimal. Looking at risks and seasonality, despite the bullish tone, risks remain. Geopolitical tensions, particularly in the Middle East, could escalate over the weekend, potentially impacting the markets when trading resumes on Monday. Interest rates did tick up to 4.2% with the 10-year yield, and the dollar saw a slight bounce but remains in a downtrend. The 10-year to 3-month yield curve remains inverted, a potential recessionary signal. Looking ahead, historical seasonality suggests a positive outlook for early July, particularly for the NASDAQ. Monday, June 30th marks the end of the quarter, which may prompt portfolio adjustments by money managers. Investors should remain vigilant, balancing optimism with awareness of overbought conditions and external risks. Looking ahead to Monday and beyond, key data that will be released includes the Chicago PMI. Later in the week will be ISM manufacturing, and the employment reports are slated later for the week. The markets will be closed on Friday, July 4th, and Federal Reserve Chair Powell's upcoming remarks will be closely watched as always. The market's ability to sustain its trend above the 200-day moving average will be critical to confirming a long-term bullish outlook. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.